Yes, folks. Are you ready? Are we ready, folks, for another conversation with Basement Rudy of the Level 3 Dynasty? Next to... I got nothing. Okay. So as we continue our Q&A, I answer like 2 questions in like a 4-hour video, and the Q&A will last for the next 2 to 6 years, and most of you won't be around because you don't have the attention spans, and you'll probably quit Magic before we even make the end of this Q&A. Thanks for joining me today. Hope everyone's having a swell day. Folks, crazy world, isn't it? Seeing this collectible stuff, pretty nutso. All right, Rudy. We got some. All right, let's see what we got here. Rudy, let's start with something simple, shall we? Let's scoot back here. What were the books that influenced you the most? I'll be honest with you guys. I don't have the mindset or attention span, especially nowadays, to really read new books, and that I find that a little disappointing. I kind of miss that. I think reading and discovering new entrepreneurial type. See, I usually like the type of books that are not like how to get rich, how to invest in the stock market. I don't like that whole guru, hold my hand, let's prancercise. I really don't like that concept. I actually like books that are more like written by very successful people that like share their story of like what they went through. That's kind of the type of books I like to go through. Like, now again, nowadays, I don't read anything. I struggle. I mean, I can't even get time for a haircut. I struggle literally to navigate just the time with the family and the amount of workload that I have to deal with and manage on my schedule. There's not really any time for me to decompress and read books like I used to. I do plan on returning to reading books and playing old school video games, going back to playing, the Resident Evils and Final Fantasies and all the old school Valkyrie profiles and, all kinds of Baldur's Gates and Diablo 17 and, all kinds of silly shenanigans. I do plan on doing that in the future, though, when I kind of restructure my life again in the future, but we'll see. But yeah, as far as the books goes, I prefer books like, what was that guy? The AOL guy. I read that one like a year ago. Steve Case? Not Steve Jobs, Steve Case. The guy's story of how he started America Online. And he wrote a book about that. Like stories like that, of how like the journey someone goes through to build something and change the world. I like that kind of stuff. And a lot of the books about even California and Silicon Valley, of the startups, the tech companies, a lot of what these people went through. I like the stories of some of these financial and Wall Street people, how they started from nothing and how they navigated to figure things out and find little niche markets. I like stories like that. People who created something new. The guy who created the Super Soaker from back in the 90s. I like the people who created the old board games. I like the stories of like really outside the box people. Those are the kind of books I would recommend in general if you're looking for something to really learn or read and expand your kind of thought process to help rewire how you see things. I think those are a better type of book versus going to a bookstore, your local Amazon.com bookstore, and just going business books. Oh, look, marketing, how to sell anything to anyone. Sell me this pen. I'm not really a fan of that kind of thing. So, all right, let's get into the good stuff of this video. This next question is kind of a very complex one I'm going to really hammer into. Rudy, you mentioned, actually, let's do this one first. Rudy, how do you determine when a collectible has reached full maturity? How do you decide to actually liquidate the sealed product? I'm assuming he's referring to sealed Magic-related boxes of some sort. Or it could be Pokemon or Yu-Gi-Oh! Or Weiss or Flesh and Blood. It could be any card game, honestly. How do you determine when to actually sell the product? All right, so we're going to pause on this one for a while, and I want to kind of explain to you all. Making the decision in a normal situation, like if we're talking an equity or some sort of ETF on Wall Street or a regular mutual fund or some sort of instrument that's traded on an open exchange, there's no set maturity date. There's no set best time to sell. Of course, everyone always says, well, Rudy, the market's all-time high. You should lock in profits. A lot of shorter-term individuals, and short-term means less than 5 years, always like to say that kind of stuff. So when you're dealing with, let's say you have a 401k, a 403b, or you're a SEP account, or you're self-employed, you have your own little IRA or whatever. When you make those monthly or annual contributions, there's not really a set best moment to liquidate. And the same type of concept is going to apply to the collectible world, specifically sealed product. Even if the game booms or busts, most sealed product, after it proves itself, that's a very important line, after it proves itself, very important line, after it proves itself, it really will always indefinitely hold a certain minimum floor price. There'll almost be like a safety net in place. So the short answer for most of you who are just kind of want a general thing and, do your old thumbs down, twirly bird thing and take off is, you should never sell unless you need the money. That's really the simplest, shortest answer for the average individual in the United States or around the world watching this video. If you don't need the capital, why are you liquidating something that's an old 20-year-old booster box, or a 15-year-old, or even 10 years old? Even if it's a 10-year-old booster box, why are you locking that in? Well, Rudy, I have to lock it in. You see the price of okay, I don't know what a good example is. You see the price of let's pick on something stupid. Revise, 4th edition. Well, Revise is the hot thing. Everyone's milking Revise. Would you see the price of Revise, Rudy? It's like $1 bazillion. I got to lock it in before the bubble bursts. And that takes me to the next very philosophical conversation that we can all reflect on together. And that is we all fall for this. And I used to fall for this a lot. The age-old, come on, Rudy. If the stock can make it to $80, the stock's worth $120. What? The 80, 120? What does that mean? Trust me. What? You can't just say that and walk away. And someone did that to me when I was at a brokerage firm years ago. And this applies to magic. The problem all of us fall for is we get stuck with certain price memory, and we have certain expectations. And what really derails our thought process is when the pricing of a certain item or asset or sealed product or graded card breaks out of that range. We tend to have emotional responses of, what? Look at that! Oh, that ain't gonna hold. What a bunch of Timmies. We tend to immediately, our brain triggers and doesn't accept that kind of an answer. And that leads to very poor decision making. Let me give you all an example right now. I don't know if I really want to go into that. We're going to stay on the topic here. So this leads to a lot of people making bad decisions long term because they feel they, quote unquote, missed the boat. The easy money's been made. It's over with. I'm chasing returns, that kind of thing. And while that can apply to certain things, if you're going to be buying today a booster box that just spiked from $100 to $1,000, if you pay $1,000, yes, it may retrace back to $700, $800. It's very normal to have a 10, 20, 30% retrace after a tremendous move. But if you're willing to wait 5, 10, 15 years, one of the biggest things I've learned about everything from equities to the debt markets to any form of derivative like an exchange-traded fund or a mutual fund, any of those things, in the big picture, fighting over pennies makes you lose a lot of dollars. And I had to learn that the hard way. I screwed up some serious things. Looking at you, original Zendikar in 2008. Looking at you, new Phyrexia in 2010. I screwed up some bad things. My infamous story, you guys know. I walked away from an entire pallet of original Zendikar because I only wanted to pay like $95 a box or something. I don't remember the price anymore. And they wouldn't come down below like $100 a box. And I said, screw you, trying to rip me off. And there's no discount. So we're $5. And today, a 500 pallet brick of original Zendikar, instead of being $100 a box, has 500 boxes, which is $50,000. Obviously, a pallet like that would be $500,000. So I lost almost $500,000 over essentially $5 a box, or essentially $2,000. You see my point? Same thing with new Phyrexia. I missed out on new Phyrexia because I wasn't able to build a large position like I did in Scars and Mirrodin Besieged back in 2012 and 2013 when I started buying those particular products. And then I built the final position in, I think, 2015 for $125 a box, was for Scars and Besieged, and bought a couple hundred of each. I still have most of them, minus a few box openings we've done over the years. New Phyrexia, since it was already at $200 a box at the time, I was so pissed at myself and pissed at the sellers, and took a very emotional reaction and aggressive response. I refused to buy any new Phyrexia boxes at $200 a box. And I look back now and it reinforced how stupid I was, because I let emotion dictate my decisions. So when we go back to this gentleman's question of where do you exit, that's an invalid question. The question is really the individual situation. If you're someone like me, I'm 36 years old. I don't smoke, I don't drink, I really don't gamble, even though everyone says, magic and collectibles are gambling, but scratch-offs and lotteries and things like that. I try to avoid a lot of these types of things. I don't engage in a lot of some of those things that I consider more high stress or a lot of anxiety. I try to make sure that it doesn't derail my state of mind. Another reason I don't do options trading, another reason I'm not really big into a lot of extreme things like that, because the mental wear and tear and I need to be able to reset and have sleep at night, you know? And to me, that has a lot of value. So as we move to part 2 of this video here, you need to be able to stay focused and have rest. You know, you can't just be all wound up where the stress and anxiety and blood pressure will kill you, because there's no real point of doing this, because we've talked about many times on this channel. If you're not trying to just make quick money and take shortcuts in this world, which you can take that path, you will eventually figure out it doesn't work. You may get lucky and think you're some sort of special Timmy, and you may get lucky and hit 1 or 2 things really big. But in the long game, you will eventually learn. And remember, gamblers and people who engage in those activities only tell you about the times they win. They don't tell you about the 20 other times they lost. So keep that in mind when you discuss those type of topics with other people. So when it comes to, making these decisions, selling anything is really a very complicated question that's based on everything from the macro economy in the world to what's going on with that specific hobby of the item involved, what's going on with competition in other hobbies, what's going on with the overall other investment classes, stocks, bonds, real estate, crypto. You have to take into consideration all these different variables. And at the end of that conversation, the number one most important variable is going to be your personal life. If you're in a situation where you're 18-year-old Rudy living in his parents' basement still, I know, no difference today, just the basement's a little bigger. If you're 18 years old, you're getting ready to go to college, you're taking out 6 figures of student loan debt, sure, you're not paying interest in the meantime. You're working a regular job, slinging drinks and bartending through college, just like I did, and you're just bringing in some cash flow to pay bills and live a little, and you're chasing the ladies of the night and having fun. I mean, that's great. But if you're in that situation, I can very clearly tell you, you're going to have a lot of life events heading your way, whether it's a significant other, whether it's popping out 45 different kids, or whether or not you're going to get hit with medical problems, bills, travel. Maybe you take a job outside, long distance. You have to reset your life. When you have a lot of heavy life events coming your way, you must be very, very careful taking the investment path, because buying into anything, if you're buying standard boxes today of, I would say War of the Spark or Throne, well, I guess godly time flies. Those aren't even standard anymore. Is Throne still standard? Barely? Or I guess Kaldheim will knock that off? My God, time flies. If you're buying standard boxes today of Ikoria, okay, let's talk about Ikoria. Or actually, no, let's stick with Throne. Throne's becoming a very hot topic lately. Throne of Eldraine. If you're buying these boxes today for $90 or $100 a box in the open market, maybe $105 with tax, who knows? If 2 years from now you're looking to sell the box, the probability of you making good money and incurring the risk of holding this product in the market is going to be very minimal. Because if you can only sell that box for $120 net shipping and fees, as we all know, you're not going to make any profit. Or if you do, it's going to be very minimal. So therefore, you're incurring risk for no potential real justifiable reward. And when you do things like that, that's dangerous. That's rough, because let's say you put your $2,000, $3,000 life savings, instead of you're just tired of sitting your checking account, you're seeing all these people on Wall Street bets slinging things and GME to the moon and Bitcoin to the moon and magic to the moon and Pokemon's to your moon. Flesh and blood is on a different planet. And when you see all this stuff happening, it makes you feel left out. You get that FOMO because you're seeing everyone around you, or at least you think that because you're watching social media. You believe everybody around you on social media, which isn't real, is becoming very, very wealthy, engaging in all these hot commodities, all these hot sectors. And you want to be a part of it. And that continues to fuel growth in all categories. The problem is you are not in a situation to leave that money for 5-10 years, because the market will cool. The tone will change. We've been through this with reserve lists in 2018. We've been through this with Magic as a whole in the mid-2000s. We went through it with new stuff in Magic in 2017. We saw the reserve list tank in 2018. You're going to see ebbs and flows and hard movements depending on the old trend is your friend till the end, until you get punched in the face by Chuck Norris. And that's why it's really up to you. If you're 18 years old, going to college, working a regular job, which I recommend living at home. Don't move out. Don't try to be a hero. Don't go rent an apartment. Don't go rent a house from me. Don't rent and do it. Stay at home with family. If you have a stable life, you're very fortunate to have friends and loved ones that are willing to help you, and you're not psycho, and you can have communication without escalating. If you can do all these things, stay at home. Do not move out and be a hero. Now again, if that's not an option, it sucks. It is what it is. Sorry to hear that. It's going to set you back. If you can do that, stay at home. Who cares what people think? If you're trying to date somebody, well, Rudy, I can't date anybody and tell them I live at home. Wrong. Then if that person doesn't like you because you're at home and they can't see the bigger picture, it ain't going to work long term anyways. Trust me. And you have to understand that you need to do everything you can to accelerate and leave and get older and grow up in this world to be on that path of wealth creation, accumulating of assets, and doing this stuff if this is the type of stuff you're into. Some people don't give two flips. They're not looking to become multi-millionaire. A lot of people just don't care. Seriously. And there's nothing wrong with that. Seriously. It is not always about money. Many things in this world, there's been days that I'm just like, you know what? Sometimes I've even questioned, is it really all worth it at the end? Because there are times when I'd rather just kind of chill out and not do much and just relax. Go outside and kick the soccer ball. You know, literally, go outside, dig a hole, and be a carrot for a couple hours. There's value to that. Seriously, there's value. Just sitting on a back porch or on a balcony, depending where you live, or on the beach or whatever, and reading a book. And that's all you do for the whole day, and eat some tacos in between, and maybe fool around with your significant other. They're literally simplicity. Don't underestimate the value of that, ladies and gentlemen. But, you know, so when you determine these things, that's why the simple question of when do I sell my investment has no answer. The simple question of what's the best box to buy? There is no best box to buy because no one can predict the future. That's why you need to split and try to kind of diversify into many different boxes, into many different classes, because we don't know if literally, you know, I mean, look at, what's a good example? Look at Eternal Masters right now. $400 a box. Eternal Masters hasn't gone higher or lower in years. It's kind of strange. And then all of a sudden, look at, you know, look at Kaldheim. Look at Eldritch Moon. Look at these sets that are up, you know, 1, 2, 3, 400%. And they are newer than the products that haven't done anything. Look at RTR Gate Crash and old Dragon's Maze. The infamous block that everybody points fingers of and ridicules for anyone who wants to hoard and invest sealed product and become an evil investor, bamboozle. You know, you have to understand some of these things are not going to age well. And you need to, and I understand that, and I accept that, and that's cool. But at the end of the day, you have to be able to split, because when you take the average return of 10, 20, 30, 40, 50 different things, if one or two of those things turn into Dragon's Maze, you don't really care. Because if you, as you know, if you have 100 different numbers, and one or two of those numbers are garbage, the average is still going to be very, very high. It won't impact your average. The key is the old, free lunch the only free lunch, diversification, folks. So I think I'm going to end on that particular topic right there. We'll go to something different. So overall, folks, when you determine when to lock in and bring your money back and get rid of the assets or of any class, you need to determine why you're doing it. Are you doing it because you feel it's a bubble and you want to lock it in? Are you doing it because you want to use the money for another investment? Why? Do you think that investment's going to outpace the other one? Are you sure you're not chasing returns? You have to determine why you're making the decision. Did you just get done reading a bunch of posts on the internet or comments or some video from a creepy basement guy or scholars on Reddit or some underground Facebook group? I mean, did they tell you that the hot thing is going to be ABC and new stuff is all garbage? And are you going to continue to buy into that? And then 3, 4, 5 years later, a creepy guy on YouTube makes a video saying, yeah, you should have stayed the course. You got clobbered. And that happens a lot. That happens a lot, everybody. And, you know, it's not, you don't need to be angry and upset about it, but you have to understand that's part of life. So I want to jump over to a few small things. Good question here. What's the worst major Magic investment, Rudy, you've ever made since becoming an evil investor? See, this is funny because my worst investments in Magic are just the ones that I walked away from. The worst investment I've ever made in Magic, well, actually, there is no really worst, because whenever I make an investment in, what's a good example? An investment in a particular item, and it's deemed worse, like, okay, let's pick on Theros collector boxes, or Ikoria, or Zendikar collector, or I don't know, I'm trying to pick something here. A core set, core 2012, 13, core 20. Aren't these core? These are core 20. You know, that's the funny thing. Every investment starts off as a bad investment in Magic. And it's almost expected at this point. You know, it's almost expected for me to see everybody be negative and upset that the investment is bad. The key is time holds its hand, and time changes the entire view of the public and the entire value of the investment. And the more time that gets between you and that product, the higher the probability success goes parabolic. So I think it's an interesting way to look at it, folks. Fun video, isn't it? So in the part 3 here, you know, as time goes forward, like I said, any bad product will always become a good one. And that's a weird thing to say. So essentially, Battle for Zendikar, printed to oblivion. Oh, don't buy it. Rudy's pumping this garbage, you know. And you can replace Battle for Zendikar with any set in the last 4 years, and you can use that same sentence of Rudy in doing that. And I did know, in the back of my mind, when I designed and did this YouTube channel, and I did all this stuff, I did know that the majority of the public, with every new release, will maintain the standard Timmy negative mindset. They were a product of social media. They're a product of short term. They're a product of very dramatic emotional responses, which leads to the worst type of investor you can get, which always will lose. But I did know as the years went by, I knew time would prove otherwise. And that's kind of what happened, you know. Oh my God, it's really been a year? A year ago, when I closed the Patreon account from a bunch of just letting endless amounts of people sign up with no limit, you know, that's what really created that was the moment I had to do it, because the market was realizing at the beginning of 2020, before all the shutdowns, everything happened, the market was realizing, and the tone of attitude towards me in sealed product of even newer things, the Battle for Zen, the Oath, the Kaldheim, the Aether, I can go on and on. Rivals, the Regular, the Dominaria, the Eldritch Moon, the Shadows over it. I mean, it's just like beep, 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 every single one. The market was realizing that the market was wrong. And I started to see a dramatic shift in behavior of people really wanting those $79.99 shipped boxes. I'm sorry, pay on a 2% credit card, include the $15 monthly fee. Technically, it's $80.62 a box. I apologize for hosing you on 82 cents. So that became more and more sought after. And there's a point where I physically am unable to handle and move a certain amount of product, because there is not endless amounts of printed to oblivion product, even on standard products. No matter what the world wants to tell you on the internet, the Wizards of the Coast does not make millions of booster boxes of every set. I don't know who comes up with these numbers. I don't know why everyone says that there was 1 million boxes printed of Dominaria, there was 1 million boxes of Throne, 1 million boxes of Battle for Zen. Kaladesh was the hottest selling thing. Khans of Tarkir, people come with these million booster box numbers. Wizards isn't printing millions of booster boxes. I don't know where that comes from. I mean, I can tell you this, when a product's released, usually in the first, I can tell this one particular line from one particular distributor. When a product is released, it is expected that a distributor on a successful new release product within the first 6 to 12 months of a standard product release can probably move between 50 and 100,000 booster boxes if it's a home run product in a 12-month period. So think about that. Even if it's a home run product, let's pretend it's the highest possible number. We're talking Battle for Zen. And that distributor hit the most record number ever of 100,000 boxes. Okay, let's say that distributor is the biggest, and the next two distributors do 70,000 each. And then the smallest distributor does 40,000 boxes. How is that 1 million? What is that, like 300,000? And if it's that hot, that means stores are mass box opening and burning through these packs. I used to do the same thing. I used to do mass box opening, call them up. Baby, let's do it. 480, 500 pallet. Let's do a full pallet, mass box opening. And I would burn through it all. 6 months later, how's the set look? Still doing good? Let's double tap. Oceans 12, Oceans 13? They dug under the casino, and they're shaking the casino, try to get people to gamble and then panic and leave because they rigged the game. You guys know what I'm talking about? And the guys dug underground to do like a fake earthquake in the casino. And like I said, nobody cares. Hit them again. Go for a double tap. And that's what I would do. And that's what stores did. So in 2020, at the beginning, when the market started to realize that, this printed to oblivion in new product was not dead money. It was not garbage. A big tone shift occurred a little over a year ago. And because of that, I experienced a very hard spike giggity. We had to throw in 1 giggity today, folks. Come on, cut me some slack. I had to lock down and really throttle back the Patreon account. And yes, there's people out there that figure out, they refresh the Patreon account. One person closes their account and it pops up before the website updates and they get the one slot. And, look, there are people out there that are hardcore. Yeah, if you're good enough and you want to spend enough time, you can game anything, you can get anything. I get it. But overall, the goal and the achievement was successful. of being able to just calm things down, throw water on the fuel. And that was the most important thing, because there was a moment in the early 2020 and in 2019 when standards started going crazy because of Pioneer and all the new boxes started to go up, and all the Timmies realized they screwed it up and they missed out. There was a panic to buy, similar to what we're seeing now in 2021 with Pokemon, with Flesh and Blood, and with vintage Magic boxes. We're seeing it across the board. And I saw the first signs of this in 2019, 2020. And that was the reason why I had to throttle back the Patreon. Because remember, no matter what they're going to tell you on the internet, I lose money selling boxes. That's $79.99 shipped. It hasn't changed. Actually, it's getting worse. It's still things I still kind of have to deal with. I've even considered raising the price like 50 cents to $1 because the post office keeps raising shipping costs and Wizards keeps raising actual costs on their end. There is no money in doing that. Depending on the size of the order, if the patron buys 1 box a month or 6 boxes a month, it depends how much money I will lose. If a patron buys 3 boxes and I ship it priority airmail and I'm in Florida and they live in California, I'm literally losing like $13. So if the patron pays $15, I get 14 of the 15 after fees. I make less than $1 on handling the transaction, talking to the patron, replying to messages, and handling the account. You understand what I'm saying? So you have to understand, there's a reason why no one else is doing this, because it's not exactly very enjoyable. It's a crap ton of work, and there are times when you're selling that much product at a loss, it's tough. There's times it's tough. It's not simple. It's not this simple thing. So when people get very angry and make up these things and these weird rumors about Rudy must buy booster boxes at 40 or 50 a box, maybe 60. Now, there are times I have been able to buy booster boxes between 60 and 70 a box instead of like the 78 a box. And that's mostly from buying from other people or people liquidating collections, and I do a mass deal. But overall, it doesn't work that way, folks, especially on new release. All right, so anyways, I think this is a very interesting video. Hopefully you guys like the tone of it, a little bit of a different one. So, as far as this question here, like I said, this individual is asking you, what was the worst Magic investment you made? As you guys can see, I know I was all over on tangents here, but as you can see, and I know this sounds terrible and I could be jinxing myself, there really isn't a worst Magic investment. Now, if you want to talk about the Magic investment with the least amount of returns, I can kind of go that route, but just because something only made 3% a year versus 8% a year, is that really considered? I don't consider that the worst investment. By comparison, you can create any form of chart and create your kind of relativity type thing, but I don't really think that's the right way to do it. And all right, I'll go ahead and say this real quick. So when I was at my original brokerage firm in 2008, 2009 during the crash, one of the things I really hated is that at the end of each month, we'd all get called into a corporate meeting. They would take the 100 licensed brokers and they would rank you all from top to bottom. And the bottom 15% of all brokers at this firm would automatically be written up. And if you got 3 write-ups in a year, you were automatically fired. And I couldn't stand that. I remember I got an argument in one of these big meetings one time with this corporate exec. And this executive and we butt heads. Again, I told you guys, I don't mold well to working for other people and getting a job because I question too many things. And this corporate executive got pissed at me for calling him out in this meeting. And the reason I called him out is I made a comment in front of everybody. And I said, how can you rank everybody and automatically write up and threaten 15 brokers a month their job? What if all 100 people have good numbers? And his answer was, well, the bottom 15 weren't as good as the top 15. And I said, that's ridiculous. So if we have a good month, we make record profit, even though there's still going to be people at the bottom 15, even if they have record numbers. And it created a bias, and I couldn't stand that concept of every month somebody's going to be treated poorly. All right, sorry. It just reminds me of the worst investment, because just because a Magic product stays flat, or what's it going? Return to Ravnica, $120 a box after what, 10 years? I guess that's my worst investment, right? Because it only went up what, 3% a year? What, still double the CD rate? Sorry, I get worked up on that kind of stuff, folks. All right, so let's end this video here. I know we're at the end. We're past 30 minutes in the video, essentially. And I know the view count is usually dropped significantly, so I'll hit kind of some of the more sensitive questions that everybody always asks, and I really don't like answering at the end of this video. So actually, like 5 or 6 of the questions are, Rudy, how much do you think your cardboard empire is worth? Rudy, how much money do you think you have in Magic? Rudy, how much money do you think you actually have in graded cards? How much do you have in sealed product? How are you comfortable holding this in sealed product? How much money do you have in Pokemon, Flesh and Blood? So I'll go ahead and end this question here, or this video today, with the infamous Rudy money personal situation, since the views will be lower, and I know most haters are long gone at this point. And actually, oh yeah, this last question too. Rudy, what was your net worth when you had a real job at the firm you worked at, and what's your net worth grown to in 2021? Okay, so, how do I want to, in 2008, when I first started my real brokerage firm, and I got my licensing in 2007. I got my Series 7, which is, the better version of the Series 6. I got my Series 66, which is the Uniform Combined Securities Act, which is a Series 66 is the combined Series 63 and Series 65. The Series 66. So if you have your 7 and 66, you can be a full-blown registered broker, kind of a broker dealer. You can become a registered rep, as they say in the industry. Registered representative is the technical term, according to the SEC. If you guys, I know you guys weren't really around, a lot of you back then, but if you go back on my YouTube channel, in 2017, I actually have an old YouTube video where I show my broker's licenses. I blocked out my social security number, and I show my broker's license and my test scores on it, because my scores were extraordinarily high. And if your scores are over a certain point, they pull you aside after you take the test, and they actually replay the security camera to see if you cheated. So they held me for almost an hour to replay the footage to see if I cheated, because I scored in the top percentile, which is between the 95% range. And when you score around a 95% accuracy rate, when the national average is about 70, 71, and you need a 71 to pass, they get very suspicious. So it was a very bumpy time from the beginning for me. So when I started in 2007, when I first got my first real job, I had started a smaller brokerage firm, which isn't really small, they're still publicly traded, in North Florida. And that particular brokerage firm, I only lasted like a year. I didn't like the culture with it. I didn't mend well with the older people there, and me being a young gun and a young shot. So I went to the Big Daddy firm, one of the big three, I guess you could call them. I went to that afterwards, and I stayed there the longest, which was almost 5 years. Went through a lot of ups and downs and crazy crap, folks. No joke, a lot of stuff. My net worth I think, how do I break? Okay, so at the beginning, when I started that job, I owned one little rental house that my dad was big into real estate, still is. And he showed me, and I told him I wanted to get my first little rental house. So I did a little rental house on the other side of North Florida, pretty far away. It's like 30 minutes from me, which I guess isn't that far to a lot of you. And I bought a rental house 20% down. My mortgage was $850 a month, and I was renting it out for $999 a month. I actually got very lucky, had an amazing tenant that stayed for like 5 to 7 years. Then when we finally left, we remodeled the house. I put 10 grand into it, and then I raised the rent to like $1,300 a month from $1,000. And actually, the same person's there as of this filming of this video 10 years later. And I actually paid that 30-year mortgage off, and I paid it off, and I think in 14 years by making instead of the mortgage payment being $850 a month, I just took the entire rent payment, which was $1,000 a month, and paid an extra $150 every month. And then when I raised the rent, I was paying almost double mortgage payments every month. So I paid off the 30-year mortgage, and essentially it was like 13 or 14 years. So it was amazing. So I finally got it paid off. I bought the house in 2005. So it was before the 2008 crash. You guys saw the whiteboard video where I bought that house and it tanked and it came back. Remember that whiteboard video? It was a good video. So at that point in time, I owned that piece of real estate, which let's say is $150,000. Of course, it had a mortgage on it for most of the life. Now it doesn't. And at the time, too, I had just started out when I was younger. And at that time, there was no Robinhoods, and I wasn't using E-Trade. It wasn't really a huge thing. And when I first started investing was in 2003. I opened a Vanguard account. And I think I put my savings of a couple $1,000s in it that I had saved through college and working and everything. Now, I eventually, in 2005, when I got that account up to $10,000, I actually closed and liquidated my Vanguard account in 2005. And I actually, in 2005, I rolled that money because I started buying Alpha cards. In 2005 was the very first time that Alpha Magic cards were being graded by PSA. And that's when I had met Daniel Chang in Vintage Magic, and he was grading a lot of great alpha cards and putting them on eBay. And I was buying all his PS every time him and other people started putting. There was another company called Card Hoss. There was another company called Steel City Collectibles. There was like 5 companies doing it. So every time a PSA 10 would go online, I literally, if the bidding was at $300, I just bid 1,000 in the last few seconds, no matter what. I just wanted every single one. And at the time, I ended up winning them, most PSA 10s for, between $200 and $300. So I had liquidated my actual investments and bought Magic cards. At that point in time, I would say I had the rental house. Now, here's the funny thing, folks. I was still living at home, legitimately living at home. And I owned my first house, and I was still living at home. So it was really funny. So when I was like, I had a girlfriend and everything back then, not Lindsay now, it was a different woman. When I was dating everything, it was really weird because they'd realize I had a house. It was being rented, but she lived at home. It was super hilarious. It was a great conversation. And so I had the house. It was $150K. And I had about 10 grand that I was expanding into Magic at the time. Now, my old original Magic cards from middle school, high school, I also noticed started to appreciate. Had a ton of revised cards, a little bit of Arabian Antiquities, 4 Horsemen sets, very, very little. Not even a full set of any of that stuff. But in 2004, 2005 was the infamous turning point. That was my first major expansion. So in 2005, I started buying revised dual lands. ABU Games, the owner of ABU Games is Gabe. And I started buying, and I was working with him where every time he got PSA 10 revised dual lands, I would buy them for between $50 and $100 for PSA 10 revised duals. Then whenever he got unlimited and alpha beta cards, like if he got a beta Mox and it was a PSA 10, I'd buy it for $2,000. I know. So I started to expand and put all my resources into collectibles in 2005. At this point in time, my net worth was still, I would say my net worth was still the rental house and maybe cards, so maybe $150,000, then maybe $50,000 at that point in cards, so maybe $200,000. I had built up at that point after 3-4 years, maybe going into 2006. So it was starting to build, and I liked the direction of it. It was nice. I did do a little bit of stock things and stock trading and investing in 2007, and I got hit pretty hard in 2008. Mostly started getting involved with some leveraged ETFs in 2007, 2008, I believe. And I actually made really good money because I was actually writing option contracts and selling contracts. I don't want to get into all that, but I was approved for level 4 naked option contract writing with E-Trade, I believe. And I started writing and underwriting, just selling naked options. I know. In today's day and age, I'm like, what was wrong with me? I can't believe I didn't blow myself up. So to wrap this up, essentially most of the money was created by appreciation in collectibles, and also when I hit it big in 2008 after that, I did a lot of bond investing and fixed income investing, and also I was banking over 50% net paychecks, saving to literally, like when I had my first year when I made $55,000 at the firm, like I know nothing crazy. If I was netting, $45,000, no joke, I was saving 30 of the $45,000 in 1 year. And then I took that $30,000, was buying bonds at 30-40 cents in the dollar, and started buying all alpha, beta, Arabian Night cards in 2008, 2009, 2010. So as you can see, taking 40,000 a year and just dumping everything into bonds, Ford bonds at 30 cents, and Victoria's Secret L brands at 40 cents, and all the Royal Caribbean Tyson chicken, what were the other big ones? I can't remember. So essentially what was happening is these things started just skyrocketing. And so to end the video, I would say overall, the collectible positions mostly expanded like crazy between appreciation and continuing to build to it every year for 15 years. And I would say the collectible position surpassed 7 figures, and